Well, hello and welcome. You're watching Market Cafe on ET Now with me, Somit Sarkar, and my co-anchor, Vinny Motiwala. Going off first on the US markets, Vinny, how are the cues coming in from the US markets?
So absolutely, when you see how S&P 500 has actually ended, seems like a slight bit of a rise that we saw coming in terms of the US markets. Obviously, let's not forget that unexpectedly, a smaller consumer price increase is something that led to the optimism, given that the Federal Reserve could actually soon dial back a bit on that inflation taming interest rate hikes that we've seen coming in. But still, some bit of a concern remained as the central bank could stay aggressive as well. But yes, that was a positive sign coming in. What we saw in terms of US stock indices ended a bit higher. Let's look at how S&P 500 ended. S&P 500 was up around 0.3% in trade. 0.7% in trade. Dow was up 0.3% in trade, while Nasdaq was up more than 1% as well. S&P 500, what we saw coming in jumped as much as 2.76% to a 3-month high also during the intraday trade, and Nasdaq also capped a volatile session with gains as well, and obviously indicated that the worst inflation has likely been passed on, and now the Fed Chair Jerome Powell will closely watch the measures of service prices that exclude energy and rent also continue to moderate as well. Now, other than that, let's look at what is actually coming in terms of individual stock names. What we saw coming in is in terms of Merck and Moderna Inc. on Tuesday said that their experimental mRNA-based cancer vaccine reduced the risk of reoccurrence or death. And on the back of that, we've seen that Moderna shares actually finished nearly higher by 20%, while Merck shares closed higher by almost 2% in trade as well. Other than that, we saw Tesla Inc. that actually saw a decline coming in, down almost 4% in trade. Oracle Corporation was down almost 1% in trade as well. And Pinterest Inc. also jumped as much as 11% as Piper Sandler upgraded the social media platform stock to an overweight. So on the back of that, that was the action that we saw coming in terms of individual stock names of the US market as well. Now let's look at European markets. They do close a slight bit before the US markets. What we saw coming in, DAX was up by almost 1%, more than 1% in trade. FTSE up almost 0.7% in trade, while CSE also closed with gains of almost 1.42% in trade. On the back of that, what is coming in seems like a positive cue as of now coming in for the Indian markets. SGX Nifty is up by almost 0.4% in trade, indicating a bit of a positive start for the Indian markets, at least, Somit.
Well, moving on, a positive surprise coming in on the inflation data of the US led to a plunge in the dollar index. And along with this, if you see, the pipeline disruption has led to a surge in crude prices, and crude prices are now trading around the $81 per barrel mark, that's especially the Brent crude prices. However, on the other side, if you see, OPEC has actually cut its demand estimates for the fourth quarter of calendar year 2022 and for the first quarter of calendar year 2023 by around 0.14 million barrels per day and around 0.41 million barrels per day. However, the slump in dollar index led to a surge in crude prices because generally a weaker dollar makes oil cheaper for the emerging market countries, and that thereby it couldn't boost the demand, and that's one of the reasons why Brent crude saw such a kind of surge in trade. Along with this, if you see the Singapore gross refining margin, they also recovered from the lows of around $6.7 per barrel that we had seen yesterday. The Singapore gross refining margins are currently trading around $7.9 per barrel. All the product prices, all the product cracks did rise in trade yesterday, and that was mainly on the back of the better than expected the US CPI data. On the gas side, if you see the European gas prices, now they were marginally up because of the colder weather and lower flows coming in from the Norwegian market, and a Henry Hub also remained a bit on the higher side because of again the colder than expected forecasted weather on Friday. Now on the Asian side, if you see the Japan-Korea marker, that remained largely flat at around $33 per MMBTU. And that's the check coming in from the crude and the gas price side. But Vinny, what are the events that we need to keep an eye out for?
Absolutely, and let's look at the top events that we are actually keeping an eye out on in terms of that. And obviously, let's not forget FOMC rate decision will be coming in today as well, 14th of December, as well as there will be a news conference that will be happening. So we'll be keeping an eye out on the comments coming in from the Fed chair as well. Other than that, we have on the domestic front, we'll watch out for India trade balance as well as the WPI data that we'll be watching out for as well in terms of the domestic cues. Corporate events that you should be watching out for Star Housing Finance last day to be eligible for the bonus issues for the company. Then we do have in terms of State Bank of India meeting over raising additional Tier 1 capital fund, Tier 1 capital as well as in terms of Spanna Spurti to consider fundraising as well. So on the back of this, these are some important cues and events that we will be watching out for as well, Samit.
Well, as we were talking about the US CPI data, if you see the American Consumer Price Index has eased up to around 7.1%, easing some of the investor worries. Now, this comes after analysts expected the print to come in at around 7.3%, easing further from October print at 7.7%. Now, the world's largest economy also reported its producer price index for November, which showed a growth of 0.3% just yesterday. Remember, it was only in June this year that US CPI had touched around 9.1%, forcing the Fed to take stricter tightening measures. Now, we spoke to Geoff Dennis, listening to what he had to say on the same.
There's no doubt that if you simply look at what was happening to inflation a year ago, these year-on-year declines are entirely predictable. We're going to get more of them, I think, going forward. So I think the issue today is going to be, or perhaps I should say tomorrow when the Fed meet, is going to be, do you get a more dovish signal about where they stop tightening? They're obviously going to go, I think, 50 tomorrow. There's probably at least another 50 to come early next year, probably in 2 times 25. But I think what this does is confirm the long-term trend downwards. And I think it makes it more likely the Fed will stop at around the 5% rate.
The Fed has tightened a lot at the fastest pace, and it's been a global increase in interest rate. I think all of that adds to tight pressure. And so I think we look at inflation, which is a very lagging indicator, but also let's look at growth. The growth in the US economy is still very solid. I mean, other than housing and manufacturing, we're not seeing signs of big slowdown. When does that happen? And I think that will inform Fed policy as well. In our view, first quarter is still going to look okay. It's really, we are penciling in a recession, but that's more a second half of next year's story.
Okay. And the OPEC said that it is expected to see a robust global oil demand growth in 2023. The organization also highlighted potential economic upside after relaxation in COVID curbs in China. It also kept the demand growth forecast for 2022 unchanged, and the forecast for 2023 was also retained at 2.25 million barrels per day.
I do remember when they did cut the near-term targets demand estimates for Q4 and Q1 calendar year 2023. Moving on, the Bank of England's Governor Andrew Bailey warned about significant pressure on households and businesses due to higher inflation. Now, he also said that the economic environment is challenging. However, he said that businesses and households were more resilient than before the global financial crisis.
And Binance has registered $1.9 billion of withdrawals in the past 24 hours. Crypto exchange such as Binance and now the bankrupt former rival FTX are under close scrutiny from regulations. This is against the backdrop of FTX founder Sam Bankman-Fried being charged with defrauding investors by the US Securities and Exchange Commission.
Well, Tesla shares are trading at the cheapest ever by at least one measure as the electric vehicle giant grapples with a host of challenges. Waning demand in China and investor concerns over billionaire chief executive Elon Musk's priorities has weighed on the value of the share prices.
And let's move on. And the Japanese manufacturers' mood soared in the final quarter of 2022 to the lowest in nearly 2 years. This is according to the central bank survey. Now, the cost pressures and the prospects of slowing global demand clouded the outlook for the world's third largest economy. Both big manufacturers and non-manufacturers expect business conditions to worsen.
Well, on the domestic side, last Friday, Chinese troops carried out an incursion into Indian territory. Now, they attempted to cross the line of actual control near the Yangtze border post in Tawang. Now, it was a bid to change the status quo along the eastern sector of the LAC. Now, these Chinese soldiers were resisted by Indian troops deployed in the area. Now, this led to a physical altercation between the two sides. Now, we spoke to experts who decode what this means. Listening to that.
Well, I think there are a variety of reasons why China would choose to escalate. One is their own internal issues, really, because Xi Jinping has faced unprecedented demonstrations over the restrictive approach, the zero COVID policy approach. In fact, some of the demonstrators were actually calling for Xi Jinping to step down.
Foreign Ministry has said from time to time, and even the Foreign Minister, the spirit of bilateral relations and peace and tranquility. Clearly, the Chinese are no mood for peace and tranquility with India. What they want is to have minor victories, which they can then trumpet to their people that President Xi Jinping is continuing the strategy of settling China's claims over territories, which were first spelled out by Mao Zedong.
We are very much there. We have been building infrastructure across the border. In the international fora, India has been clearly calling out China, whether it is the UN Security Council or otherwise. Our External Affairs Minister has been very categorical. Unless and until the border is resolved, there cannot be a business as usual. So that's precisely the situation. But at the end of the day, we are continuing with the policy of dialogue and diplomacy to resolve the situation, because that's how this is going to be eventually resolved. Now, as far as China is concerned, we know that it has hegemonistic tendencies. It considers India as a strategic rival, does not give it the kind of parity India deserves. But that is why when China sees that India acquiring an international profile, which has not been hitherto at this level, I mean, across the board, and obviously they are.
Okay, on that note, we're going to slip into a very short break. Don't go anywhere. We'll be back with more news updates after this break.
Welcome back. You're watching Market Cafe on ET Now. Moving on to some domestic news. Now, the GST Council meeting is slated for December 17th, according to sources which tell ET Now that the council is likely to issue a clarification for levy of around 22% cess on SUV cars. So what are the specific details on what are the specific things in mind of the council? Meghna Mittal filed this report earlier.
Right, so as we know that the GST Council meeting is slated to be held on December 17th via video conferencing. Now, what the sources are confirming to us that in this meeting, the GST Council is like to provide a clarification on the GST cess on SUV cars. Now, remember earlier itself in the 21st GST Council meeting, the cess on SUV cars was allowed to be increased from 15% to 22%. But there is an ambiguity because there is no definition of the SUV cars under the GST regime. So that is why the industry, the stakeholders had asked the government to provide a clarification on this. And now what the sources are confirming to us that in the upcoming meeting, the GST Council is likely to clarify the eligibility conditions for SUV cars, defining the SUV cars so that the cess can be charged at the rate of 22%. Now there are 4 eligibility conditions that are there. One, that the SUV cars, the engine needs to be of the capacity of 1500 cc. That is one of the conditions. Another condition is that the length has to exceed 4 meters. Apart from that, the ground clearance also has to be 170 millimeter and above. So there are these 3-4 conditions that are there that the GST Council will clarify, providing that all of these conditions have to be met to qualify for this term SUV cars, so that the GST cess on these cars will be at the rate of 22%. So important clarification in the upcoming GST Council on the SUV cars is expected after the meeting.
Okay, thank you so much for that, Meghna. But let's move on. The Parliamentary Standing Committee on Transport, Tourism and Culture has summoned CEO Delhi Airport on 15th of December. The move comes even as the airlines have asked passengers to turn up at the airport up to 4 hours before the flight. Prakash is here, who's filed a report on this to give us more details on this. Prakash.
Yes, the Parliament Standing Committee has summoned concerned departments, including CEO of the Delhi International Airport, on congestion issue at the airport. Parliament Standing Committee on Transport, Tourism and Culture has called officials on December 15th over the issue. Chairman of the committee, Vijay Sai Reddy, has confirmed that concerned officials have been summoned to get a clear picture on congestion issue due to which passengers are facing hardships. Apart from that, committee will seek details related to action plan that has been prepared to resolve the current situation. Committee may also ask a timeline in which the current situation will be resolved. Airlines are informing passengers to report 3 hours before the scheduled departure at the airport due to heavy congestion at the airport. However, Aviation Ministry has given clear instruction to the concerned department to resolve the current situation as soon as possible.
Well, more details on that. Because of the rising complaints and chaos and crowd mismanagement at the Delhi airport, Indigo Airline has issued a list of advisory for the passengers flying from the Delhi International Airport. Now, it has mandated passengers to reach at least 3.5 hours before the departure of the flight, and the Delhi International Airport has also reiterated their one-hand baggage policy as well for domestic travel. Meanwhile, hours after Indigo, SpiceJet has also issued an advisory for both Delhi and Mumbai International Airports. Samir caught up with few passengers at the Delhi International Airport. Listening to that.
Delhi International Airport is experiencing high footfalls leading to congestion, and because of which now the airport operator as well as the airlines, they have issued advisory to ease the congestion. Recently, Indigo Airline has released an advisory suggesting the passengers that if you are opting for a domestic flight, it is an Indigo flight, then you are suggested to reach the airport at least 3.5 hours prior to the departure. So this sort of advisory has been issued. Similarly, the Delhi airport has also once again issued the advisory that only one baggage will be allowed as cabin baggage. That will be having a maximum weight of 7 kg. So this sort of advisory has been issued. But yes, if you see the ground reality, you will see that longer queues are there. Passengers have to face a bit of problem. The mega action plan is in place by the Aviation Ministry, which suggests that Delhi airport volunteers will be on ground. They will be assisting the passengers. Additionally, the airlines have been asked to reduce the number of flights, especially during the peak hours when the flights operate between 5 a.m. to 9 a.m. In addition, the number of X-ray screening machines, though these numbers have also been increased, the security personnel manpower has also been increased. So a couple of measures have been taken so as to ease the congestion problem. But one more interesting aspect is that if you see the Digi Yatra, the digital initiative, this has been recently launched by the government. So Digi Yatra app is very hardly being used by the passengers. Majorly, they are still opting the traditional way of passing through the security point. But the digital initiative of the government, Digi Yatra, is very hardly being used by the passenger. So this is one of the interesting aspects. As the minister has many times, he has been advocating that passengers should be using Digi Yatra app for their convenience. But we hardly find any people using the Digi Yatra service at the airport. Largely, if you see the longer queues, and because of which there is a congestion problem, and the government is trying to ease the congestion problem as soon as possible. But yes, because of which you see that in airlines and the airport operator, they are issuing advisory to ease the congestion.
Things that we were looking on the social media, we were expecting a lot of congestion here. But right now, just observing the situation, we think that right now it is little dim that we were expecting. So things are getting easy right now, day by day.
I was really worried about it, whether I would be able to catch my flight or not. But if the passengers are coming within the time limit as prescribed by the guidelines by the airlines, so then they would be very good in a situation so that they can handle all the security checks very well.
Well, we also spoke to Mark Martin of Martin Consultancy about the utter chaos at the airport. Listen to what he has to say on the same.
The parliamentary committee is really not going to heed much of results because again, it's going to be a is going to be the airport operator would try and pass the blame on the airline, and it's going to be vice versa without even it coming up to a solution. The solution, Vikram, is that Delhi should have had a Terminal 4 as what GMR proposed in its master plan. So airport development in Delhi hasn't really shaped up to what was committed by DIAL. The second is money that goes to DIAL should have been paid so that passengers don't suffer. The third is airports should have the option to choose an airport it flies to and not be locked and shackled to one airport.
Okay, on that note, we're going to slip into a very short break. Don't go anywhere. We'll be back with more stock-specific news after this break. Welcome back, and you're watching Market Cafe on ET. Now, let's have a look at what the Asian markets are also doing. Yes, we did have a positive handover coming in from the US markets. Look at Nikkei, opened up with gains of around 0.8% in trade. We have the Kospi, which is trading with gains of 0.8% in trade as well. Hang Seng is seeing gains of 0.7%. Shanghai too seeing mild gains of around 0.1% in trade. ASX 200, the Australian index, also is seeing gains of around 0.5% in trade. So yes, surely Asian markets have also opened up on the positive note as well. Dollar index currently trading sub the 1,500 level. SGX Nifty is indicating a positive start. It's up more than 0.5% in trade. And just in terms of commodities also, let's look at the gold prices also. We did cover crude, but gold prices as of now, are hovering above that 1,800 level. That is the key level that everyone keeps an eye out on. So yes, it's comfortably trading around that level, seems to have steadied about that level as well. And obviously that's somewhere near the 6-month high, following the sharp rally that we saw coming in the prior sessions as well on Tuesday night, while this morning also has opened up with slight bit of gains coming in there. And why is that so? Obviously, Federal Reserve to hike interest rates later, maybe the possibility coming into there, as well as in terms of inflationary pressures, maybe slight bit of an easing coming in over there is a factor that we're keeping an eye out on. So yes, that's how gold prices are trading this morning. Brent crude is still trading above the $80 per barrel mark as well. That's a highlight coming in on commodities as well as the Asian market summit.
Well, moving on from commodities to stock-specific news, and we have Ashesha joining us to give us all the stocks that would remain in focus on the back of the news flow.
Hi, good morning, Soumit. So Ultratech Cement will be the first one in focus in today's trading session. They have announced commissioning of 1.9 million ton per annum greenfield clinker-backed grinding capacity of Rajasthan, and with this particular commissioning, total capacity along with its subsidiary in the state of Rajasthan now stands at 16.25 million tons per annum. Also, statewide pan-India capacity now stands at about 121.35 million ton per annum as far as Ultratech Cement is concerned. Moving on to Hindalco, it will also be in focus, and that is because reports suggest that the company has gone ahead and cut prices. As far as aluminium ingot prices are concerned, they've cut prices by about 2.4% yesterday versus a week ago. Prices of aluminium wire rod have also been cut by about 2.3%. Important to note that company had increased prices by about 6.6% of aluminium ingot just a week ago, and prices of aluminium wire rods were also hiked by about 6.4% just a week ago. And now the company has gone ahead and cut prices. So on the back of this price reduction that has come in, Hindalco will be in focus in today's trading session. Moving on to HDFC and HDFC Bank, the group companies will be in focus, and that is because stock exchanges, both BSE and NSE, has gone ahead and approved the merger of HDFC and HDFC Bank. And lastly, we have Kamath Hotels, which will be in focus in today's trading session, and that is because board meet to consider fundraising via fresh issue of equities, non-convertible debentures and warrants is scheduled to happen today. So keep an eye out on this one as well. Back to you.
Well, thank you, Ashesha, for all those stocks and focus. But other than those stocks, there's one stock that would remain in focus and much more important, and that is the Paytm buyback announcement that has come in. Now, a few details about the buyback. Firstly, now the buyback will be through an open market route. The maximum buyback price set by the company is 810 rupees, and the maximum amount that they're going to utilize for this buyback will be 850 crore rupees. However, given the fact that the current market price is still lower than what the maximum buyback price is, the number of shares that the company can actually buy back is much higher than what they have anticipated, and that could be around 1.6 crore shares. That is nearly 2.4% of the total shareholding. Also, given the fact that the company's key managerial person and directors won't be participating in this buyback, this could actually increase the percentage and could go up to around 3% of the total shareholding if they don't participate in this buyback. Now, given the fact that it's an open market buyback, the shares will be bought back at the market price, which is lower than the maximum buyback price, and the cap on this buyback price is kept at around 810 rupees. Now, also the buyback size is less than 10% of the net worth, which means that the shareholders' approval won't be required. And however, so far we do not know the buyback start date, but usually whenever it's an open market buyback and a shareholders approval is not required, it can usually start within the next 10 days of board approval. Now, there are few important messages that the company had given in their release. Now, firstly, they said that the company's directors and the key management personnel will not sell any shares in this buyback. The second message that the company gave is that the buyback is a sign of confidence that the company is on a clear path to deliver cash flow profitability. Now, the buyback will also not have any impact on the company's growth plans in the near term and its profitability plans. And lastly, the most important line that the company said was the company is ahead of its plan to achieve the adjusted EBITDA profitability. Now, earlier the company had given a guidance of achieving this number by the second quarter of FY24, and as you can see, in the second quarter of FY23 itself, the company's adjusted EBITDA losses had come down to around 167 crore from 274 crore rupees reported by the company in the previous quarter, and this means that the company is clearly on its path to achieve this adjusted EBITDA break-even. And they had earlier given a guidance of Q2 FY24, but the company could actually achieve this well ahead of its time, and that's what the company has said in this buyback announcement. So do keep an eye out for Paytm, though the company is choosing the open market route and not the tender route, but the company might have done this to see to it that they can actually buy back more number of shares than what they would have actually done had it been a tender route.
Okay, thank you so much, Soumit. That update coming in on Paytm stock that you will be watching out closely. But shifting gears and actually shifting to the pharma space now. We have a lot of pharma companies which are going to be in focus, whether you see Gland Pharma or Dr. Reddy's, because they've met with some of their analysts and they've given their growth map as well as future plans for the company as well. Ashesha, talk to us about Gland Pharma, Dr. Reddy's. What are these highlights coming in that you're seeing?
Yes, so Investec in fact met with the management of both these pharma companies, Gland Pharma as well as Dr. Reddy's, and on the back of that they've come out with these two notes. First, let's talk about Gland Pharma, where they say that there is no clarity or visibility as far as Fosun's stake sale plans are concerned. Important to note that there were some media reports which suggested that possibly Fosun is looking to sell its stake in Gland Pharma, but the management has gone ahead and clarified that there is no clarity or no visibility as far as this stake sale is concerned. They've also spoken about Cenexi acquisition in detail, where they say that this particular acquisition is strategic in nature. They've also said that this acquisition diversifies its stake sales mix and will also give access to the company to European region, new tech as well as new clients. As far as synergies from this acquisition are concerned, management has said that they are expecting the synergies to be optimally come through within a period of next 15 to 18 months. As far as supply chain constraints are concerned, they've said that supplies of synergies are now sorted. However, as far as supplies of stoppers are concerned, they do expect normalization within the next 2 quarters. As far as dividend announcement is concerned, they did say that dividend is not on agenda at the moment, and that is on account of high leakage. So that was as far as Gland Pharma is concerned. We'll also talk about Dr. Reddy's, where the management expects Revlimid to be generating strong cash flow over the next couple of quarters. They also believe that they are well placed as far as antitrust litigation research defense segment is concerned. They've also spoken about mergers and acquisitions, where they say that apart from capex and research and development, mergers and acquisitions will be a key focus area of the company as a part of its capital acquisition agenda. They've spoken about mergers and acquisitions in detail, where they say that they are on the lookout for M&A opportunities, especially in the emerging markets, the likes of India and Russia, and selectively in the European region as well as in the United States. They do expect better PSAI growth, especially they do expect PSAI growth to come in double digits, And they've also spoken about biologic CDMO operations, where they say that these operations are lucrative and they believe India to be on the growth plan at this particular segment is concerned. So these are the important takeaways coming in from both these pharma majors, Gland Pharma as well as Dr. Reddy's.
Well, thank you, Ashesha, for all those details. Moving on, we have Vamakshi joining us to give us all the stocks that would remain in focus on the back of the brokerage notes that have come in.
Well, absolutely. Let's first start off with Yes Bank. We have a report that is coming from Morgan Stanley. Now, what they're expecting is that they're expecting some strong ROA improvement to almost 1% by FY25, and they believe that this will be helped by higher PPOP margins as well as lower credit cost. But they believe that the stock is pricing this in. Improvement going ahead will be tough and gradual in their opinion, and they're seeing much higher competitive intensity in this cycle, which is why Morgan Stanley has initiated coverage on Yes Bank, but they've given an underweight rating and a target price of 20.5 per share. The next stock on our radar is Paytm. We have a note coming from JP Morgan after the company's board approved the buyback. The buyback, they believe, won't hamper any growth plans. The company will be generating excess cash after taking into account investments as well. They're expecting some tailwinds on cash generation from improving adjusted EBITDA, and in fact, they've gone ahead and said that they expect the buyback announcement to support the stock price as well. So on the back of that, we have JP Morgan, who has maintained an overweight call on Paytm. And lastly, we will be focusing on Indigo. We have a note coming from Credit Suisse, and they believe that strong yields have sustained, which is adding on to the confidence of investors. Indigo is leveraging the strong demand environment as well, and they've seen some strong plane addition in the third quarter as well. So combination of higher yield, lower cost may lead to a strong performance in the third quarter is what Credit Suisse believes, which is why they've maintained an outperform rating on this counter, given a target price of 2,350 per share.
Okay, Vamakshi, thank you so much for that update coming in from the brokerages this morning. But let's move on and talk about V-Guard. They too had an analyst meet, and this was specifically because of the acquisition they've made of Sunflame. Now, how this actually works out for the companies, what are the key takeaways, near-term opportunities? Let's not forget, Sunflame has a good brand recall coming in. This will furthermore aid to V-Guard's penetration in the kitchen sales segment as well, and increase in terms of geographies as well, because Sunflame has a presence in the north and west region where V-Guard does not have that big of a presence coming in. So geography, sales and channels across both the companies will offer good synergies for both of them as well. In terms of sales also, V-Guard has 150 crores of sales coming in from kitchen appliances currently. Sunflame sales are around 350 crores. So collectively, that would add to a sales of 500 crores, and both of these brands of V-Guard kitchen appliances as well as Sunflame will be working separately as well. Other than that, in terms of synergies that were highlighted in the meet as well was that, talking about V-Guard, they sell the products in the southern region and e-commerce, whereas Sunflame has a quite strong presence in the north and west region, while I've mentioned. So V-Guard has a good penetration in the e-commerce space, and Sunflame has a weak penetration in that, and e-commerce and modern trade is quite a small percentage of their sales. So obviously that will be a leveraging factor for both Sunflame products, and V-Guard will get an opportunity in different geographies like in the north and the west region as well. And obviously the management said they're confident of generating at 20% above ROI, that's return on investment on for the Sunflame acquisition. First year they expect EPS neutral, second year they expect to be EPS accretive, and combined ROCE will improve as the current cash balance of rupees 300 crores will be utilized, and FY23 they expect Sunflame to see a better and reasonable revenue growth coming in there as well, Somit.
Well, thank you, Winnie. Along with this, Max Financial now had their management meet with MK Stockbroking. Now, MK had hosted this conference where they had gotten Max Financial's meeting with domestic institutional investors to discuss the company's business performance and the growth trajectory, and as well as to address some investor concerns. So, what are the key takeaways coming in? Firstly, on the transfer of that 5.17% stake in Max Life, what they're saying is that post this transfer, Max Financial's holding in Max Life would increase to around 87%, and post that Max Financial would actually sell its 7% stake to Axis Bank, and when all this stake transfer happens, Max Financial would own around 80% in Max Life, while Axis Bank would own the remaining 20%. And they're also saying that post this, the company can approach relevant authorities for this corporate structure simplification, which is one of the key triggers for the stock, and also they will eventually look to list max life going forward. On the growth, they said that the proprietary growth channels continue to remain strong, and they're expecting channel growth to accelerate in Axis Bank from 2023. Now, they're on the margin side, they're saying that the FY23 margins would be much better because of the profitable product mix. Earlier they had guided their FY23 VNB margins to actually decline as compared to FY22, but right now the management has actually upped its guidance, and they're saying that the VNB margins would improve on a YOY basis. And lastly, they also said that the promoter continues to remain committed when it comes to reducing its pledge, and confirms the intent to hold on to his Max Financial ownership. So that's another positive pointer coming in from Max Financial's and management meet that MK Broking had held.
Okay, those were the analysts meet updates that we have coming in as well. But Yes Bank is to allot shares and warrants to Carlyle Group and Advent International for the fundraise. Let's go across to Sharad, who's standing by to give us more details on that. Sharad?
Well, yes, the board has approved the allotment of 369 crore shares and 256 warrants, and this is being given to two big PE players, Advent International and Carlyle, in the bid to raise almost 8,900 odd crore rupees. Now, the bank has already received 948 crore rupees out of the total 25% of the warrants issue, and the lenders will be receiving the remaining 75% going ahead. Apart from this, two important appointments have been coming from both the PE firms as additional directors in Yes Bank as well. But what happens later for the Yes Bank, and it's expected that the bank is expected to give all their stressed assets to the asset reconstruction company, and the announcement might be coming this week as well. Now let's look at the share price movement, how it has happened, and of course from its lifetime high levels, investors have lost more than 90% of the company value. But if you see from March lows, the value has actually gone up by almost 96%. So there's two different tales coming in for the returns for the investors. Now, how the asset quality has changed, and over the last 5 quarters there has been improvement in the GNP as well as the NNPA numbers, and post the capitalization it's expected that the GNPs will fall below 2% and the net interest per net NPAs will fall less than 1%. Now, if you see the retail investors, they have been piling up the stock as well, and overall if we see from last year's 39 lakh retail investors, the number has jumped to 45 lakh retail investors for the September month as well. But lastly, I would like to point out what happens after the equity raise, and of course the capital ratios will be better than their margins, which is there as per the Basel standards. There will be benefits of credit rating upgrade and optimal capital utilization. The return on assets targets, which are set at almost 0.75% for FY23 and more than 1% going ahead, would be achieved, and the CASA ratio is expected to remain above the 30% mark.
Okay, Sharad, thank you so much for that update coming in from Yes Bank. But a very exciting lineup for you all coming in on the markets, and we do have all eyes on the FOMC outcome. To discuss that, we have Arvind Sangar, managing partner at Geosphere Capital Management, joining us at 8:05. 8:35 a.m. we will be talking about the Paytm buyback plan. We have Rahul Jain, a VP and a research of Daulat Capital, joining in with us to talk about the markets. We have Dinsha Irani of Helios Capital, CIO at Helios Capital, joining in with us at 9:20 a.m. While in terms of other price cuts coming in for V-Mart, what's the update in terms of the demand for winter wear products? We do have Lalit Agarwal, CMD at V-Mart, joining in with us at 9:45 a.m. And obviously, that's an exciting lineup that we have on the markets for you all. But, we do need some bit of positivity on terms of every day. And good news for the day is that Delhi records the best air quality that we've seen coming in since October 15th. Best air quality over there, first day of moderate air quality since in December since 2020. Surely an exciting news coming in for everyone in Delhi, and obviously improving in air quality as well. Somit.
Well, thank you, Vinny, for all those details. And with that, it's a wrap on this edition of Market Cafe on ET Now. Stay tuned for more.